Hello guys, today's video we are going to look at the types of traders, that is the scalpers, the day traders or intraday traders, and the swing traders. Now let's go to the video and start the video. Now when you venture into the world of forex trading, you need to understand the different trading styles and strategies that traders use. Now each and every style has its own time frame, risk management, and suitability depending on your personality, availability, and goals. So what are the objectives of this video? You are going to see we are going to explain scalpers, day traders, and swing traders in terms of time frames, stop losses, patience of waiting the trade to take place, or let's say take profit, pros and cons of each particular strategy, who is best suited for, and who makes more money than the other. So let's go right away to start with the scalpers. Now scalpers, just by simple definition, are traders who aim to make profit from minute price change. Usually they hold position for second, minutes, and the goal is to make a very small amount of money throughout the day in different or many trades. So now in terms of time frames, generally scalpers take very short time span, that is starting from 15 seconds, 30 seconds, 1 minute, 15 minutes, especially for the entries, and they can hold position for a maximum of about 15 to 1 hour maximum, depending on the volatility of the market and the session movement. So that is basically scalpers time frame. Now what about their stop losses? Stop losses are always very tight, often a few pips, like 0.5 pips to maximum of, let's say, 5 pips, depending on whether it is major or minor pairs. So place that in mind. So if you're taking trades and your pips are below, I'm not talking about the hybrid. All these trading style have got hybrid. The people who are day traders and at the same time they're scalpers because of how they do analysis from higher time frame to lower time frames. I'm just talking squarely to scalpers. Now what about the patience and waiting time? So most of these scalpers require high concentration and quick decision making, as trades are executed rapidly, and patience is needed for you to wait for the right moment and enter and then exit. So patient time is always like about 1 minute to, let's say, 1 hour 30 minutes thereabout, and they'll be in and out of the trades and then wait for another opportunity to come through. Now what about the pros and cons? Now for you to be a scalper, you will need to have constant focus and attention that you need to be having all the time. Another con is you will be incurring a lot of transaction cost, especially the commission, because you'll be taking so many trades at the same time in a day, like let's say 10 trades or 15 trades in a day. That means you'll be paying a lot of commission, and then this trading strategy is emotionally demanding. You will have high level of stress and blood pressure. So just prepare your tablets, because trades will be moving very quickly, some without you, some with you, and some to your stop loss the minute you place it. Now so the thing is this: who is it best suited for? Now for scalpers, suitability of you to thrive in this fast environment, if you are, what I mean is that if you are able to thrive in this environment of stress, it means this scalping strategy will be yours. If you don't like waiting for so long, this trading style will be for yours. And then if you like trading on lower time frame, you can also do that, but just be aware that the level of stress and the number of stop losses you're going to take can easily match, and then your take profit is going to be like 1 to 1, very quick. So just be aware of it. So it is not ideal for people who are just beginning due to its demanding nature and the need for quick reflex, if I may say. Now let's go to the next trading style, and that is for the day traders. So for the day traders, by just simple definition, day traders are traders who buy and sell any security, let's say forex, crypto, within the same trading day, and close all positions or most of their position by the end of the day, to avoid other risks, let's say of spreads and paying commissions, etc. So in most occasions their time frames significantly varies, that is from 5 minutes entry and 15 minutes entry or 30 minutes, and then the analysis they do in 1 hour, 4 hours, and maximum of day. Some even do in a week, that is for top down analysis. So just be aware that that is mostly, like myself, I'm a day trader. I'll be entering on 15 minutes and 5 minutes in most occasions, and my analysis are always in 4 hours and 1 day, and 1 hour for the current situation of the market. So that is what you need to use as a day trader or intraday trader. Now that is when you want to mix it with swing, it becomes an intraday trader. So you move from day traders because you can now hold your trades for long. So let's talk about the stop losses. So in terms of stop losses, you will have I think this was wrongly written. So you will have in most occasions, especially in major pairs, you will have 5 pips, from 5 pips upwards to 30 pips, depending, some even have 40 or even 50 pips, depending on the pair you are trading, because exotics and minor pairs, as I explained in my previous video, have high spreads, and therefore you're going to use bigger stop losses of 30 pips, 40 pips, 50 pips, etc. So you need to take that into consideration. So generally the traders have got moderate tight stop loss to mitigate the risks depending on the market volatility, position size, and the type of currency they are trading or pair they are trading. Now what about patience and waiting time? So in most occasions, some trades can go to take profit within 15 minutes, some take 8 hours, 12 hours, 1 day, and then if it closes to another day before take profit because of low volatility, that turns to what is called an intraday trader. Now what about the pros? The pros is that you don't have to wait for so long before your take profit is hit. Maybe in a day you'll be done for the day. You don't take overnight risks like spread, like newses that come when you're asleep. So you have the potential to capitalize on daily market and session markets only, particularly on session opens. That is what these traders and scalpers focus more on. Now there is high to moderate stress levels, and you need to be monitoring your screen, but not compared to the scalpers, because scalpers monitor a lot than day traders. And then transaction costs can also add up. If you're somebody who's stuck position, the Tata group, you can have a lot of transaction cost. So just be aware of that. Then you will also require a lot of time, but not compared to scalpers. You may have a day of trading. Maybe if you trade sessions, you may have 3 to 4 hours or even 6 hours of trading in a day. Now who is it best suited for? So day traders are people who can dedicate maybe, let's say, several hours of their day to trading and have good understanding of the market and can handle the emotional roller coasters and etc. So for the short-term trading gains of, let's say, a day. So it is often recommended to people who are just beginning, or people who have intermediate experience, to be day traders before they can transition to swings. But if you are a newbie, try and avoid scalping and try more day trading. By the way, if you want to join my Telegram group where I provide daily market analysis, you can check there. Like this trade here we did yesterday, this one went nicely to TP1 to 3 point something, and then we also did, I think, gold that went, and I used 15 minutes, as you can see. So 15 minutes, we had a late entry, otherwise our entry should have been here, stop loss above here, and then we take profit. It also went well. So if you want to take such kind of trades, just check in the description section and do the necessary. Now let's move to the other type of trader, who is a swing traders. Now, who are swing traders by definition? Swing traders are traders who aim to profit from price swings in the market. They typically hold position for several days to weeks, capitalizing on medium to long-term price movement, let's say in a month, week, or even days. But most swing traders just take it in a week or etc. Now, what about the time frames they use? They use 1 hour in entry, and they start the analysis from 1 month to week to days, and then to 4 hours, which is the intermediate time frame. And then in most occasions they enter on 1 hour and rarely on 30 minutes, but some do, or even 15 minutes, depends. A trade can easily turn to intraday, and therefore you can swing it for 3 to 4 days. And in most occasions you're not a swing trader, but you're an intraday trader, because it just couldn't move because of volatility it is in. Now, what about for the stop losses of this kind of traders? So they usually have wider stop losses compared to scalpers and traders due to the longer holding period and larger expected price movement, usually from 30 pips if it is a major currency. You can check my previous video to know major, exotic, and minor pairs, or just search in the channel. 30 pips to almost 200 pips, or even 500 pips if it is gold, something like that. So especially if it is exotic pairs and minor pairs, this can easily reach up to 200 pips. And don't think that they'll be targeting more, they'll just be targeting 1 to 2 or even 1 to 3. Only few swingers target, let's say, 1 to 20. There are few who does that, but because of the market condition, they mostly target 1 to 3. That would be so much ideal. Now, what about patience and waiting time? So some trades entered maybe, let's say, on 1 hour and 4 hours can easily go to take profit within 3 hours or even 4 hours. That is why there are swing traders who can end up being day traders in that particular day, depending on how the market moves. If they entered a trade in let's say 1 hour, and then news came and it propelled the trade directly to their take profit, it means they are at upper hand and their trade lasted for 3 hours or 2 hours or 4 hours. Now, what about others? Others take it to months, especially banks, etc. So some take it to months, some take it to weeks, but mostly the trades always takes a maximum of 1 week and they are out, or if they take partial, or if they load more position as the trade continues. So what about the pros and cons? So if you are a swing trader, you will have less time consuming than day trading and scalping. You'll be spending very little time in the chart, let's say 30 minutes to 1 hour to analyze, and then you are gone, maybe for another 2 days. So you can also capture more substantial price movement, potentially leading to higher profits. And then you have more flexibility as a swing trader, and you can maintain a full-time job alongside trading. That is always why most people who are working full-time jobs, they always prefer swing trading, because they can analyze price during the night, set pending orders, and then leave. They'll come and check later if their orders were triggered and it went to take profit. Now, what about the disadvantages or the cons? Now, you are exposed to overnight, weekend, and even news market risks. They can easily affect your position when you're about to take profit, and then it just reverses on you. So you require the ability to handle moderate price fluctuations. If you are a hyper person, you cannot swing trade, because you will want the movement quick, and you will not see them in swing trading. Now, longer waiting period to realize profit or losses. You have to wait for 2 to 3 days to start seeing price movement significantly if the market is slower. So just be aware of that. So the bigger question is, who is it best suited for? Now, swing traders is suitable for people who cannot commit to full-time trading but still want to actively engage in the market. It also a good fit for people who prefer less frequent trading and are comfortable with holding positions for days or weeks. So this trading style comes with very less stress because of how much you have room to make a decision, and also time to see if the price is going to go your way or go to your take profit. So the bigger questions that now you need to ask yourself is, which trading style is better? And the answer, as you may guess it, there is no best trading style. It all boils down to your individual personality, lifestyle, and goals. Now, if you want to be a scalper, it is for those who can handle high stress, have fast decision making skill, and can dedicate significant time to monitor the market continuously. And it is not good for beginners. You need some experience in the market, or you can just start with it if you are so much into reflexive decision making. Now, what about the day trading? The day trading suits those who want to be actively involved in the market but prefer not to hold position overnight, and then you don't want to, you just want to get substantial move of 1 to 3 within the shortest time period possible. Now, it requires a good understanding of market trends, discipline, and let's say sessions volatility, so that you can move with the session and go to take profit as fast as possible. Now, for swing trading, it is ideal for people who have a long-term perspective of the market, and you can tolerate holding position for several days and cannot or do not want to monitor the market constantly. So it often consider, so this swing trading is often considered beginner friendly. Now, start by understanding your own personality and schedule. So if you're able to dedicate time during market hours, or you need flexibility, you need to answer that question before choosing your trading style. Now, it is recommended to start with swinging or day trading, most preferably day trading, and then as you gain momentum, you will find your edge in the market.